How's it going? My name is Tim Yslava, and today we're going to go over what is futures trading. In fact, we're going to have our AI trading coach actually tell us what futures trading is, how they work, and why people use them. So, literally, we just enter the prompt into the AI trading coach, right? And then we wait for it to process and actually give us the response. And as we wait, this is Archaide Automated Trade Lab, right? So you could, use this platform to learn about trading, all the nuances, right? It's like, a guru on steroids, and also launch automated trading bots. So again, we entered the prompt, what is futures trading? And as you can see, it gave us a really robust response. Let's go ahead and read it and see what it says. So futures trading involves buying and selling futures contracts. A futures contract is a legal agreement to buy or sell a particular commodity or asset at a predetermined price at a specified time in the future. Here are the key features of futures trading. Number one, standardized contracts. Futures contracts are standardized, meaning the quantity of the underlying asset, delivery time, and location are all set by the futures exchange. Number two, leverage. Futures trading allows for leverage, meaning you can control a large amount of the underlying asset with a small amount of capital. This can amplify profits, but also losses. So be careful. Number three, hedging and speculation. Futures are used for both hedging and speculation. Hedging involves taking a futures position that is opposite to the position in the real market to reduce risk. Speculators, on the other hand, take on risk hoping to profit from price changes. Number four, mark to market. Futures contracts are marked to market daily. This means that daily changes are settled day by day until the end of the contract. Number five, physical or cash settlement. Some futures contracts require physical delivery of the asset, while others are settled in cash. For example, an oil futures contract would be physically settled with the delivery of the oil, while an index future contract would be settled in cash. In terms of trading, it's important to note that futures trading can be risky due to the leverage involved and potential for significant price movements. Therefore, it requires a good understanding of the markets and careful risk management. So that's what the AI said about what is futures trading, right? And the next question we have, right, is how futures trading actually works, right? We kind of had a little bit of like a rough definition, right? And specifically the settlement piece of it, right? And these things, right? But let's go ahead and just ask it, how does futures, if I could learn how to spell, how does futures trading actually work? And then I'll have it in case, again, this is AI, right? So if I have any questions on any of these topics, or I wanted to, explain it to me in a way I can understand, I just need to literally ask the question, right? So let's say you want a deeper dive on mark to market, you just ask it to explain it more deeply and it will explain it more deeply. But in this case, how does futures trading actually work? I want it explained in a third grade reading level, right? Make it easy to understand and give me an analogy. Make it short and sweet. So again, we're going to go ahead and just ask it, like, how does it actually work? We're going to explain it in a third grade reading level. Let's see what it responds. And again, we want basically just a really, again, like a guru on steroids, right? This is our AI trading coach. So it responded, sure. Let's imagine you're a kid who loves ice cream. You have a favorite ice cream shop that sells each scoop for $2. You have $2 right now, and you know you want ice cream in a week, but you're afraid the price might go up by then. So you make a deal with the ice cream shop owner. You both agree that in 1 week you'll buy a scoop of ice cream for $2, no matter what the actual price is, and no matter what the actual price is then. This deal is a futures contract. You've locked in your price ahead of time, protecting yourself from any price increase. And in this analogy, you are hedging against the risk of the price of ice cream increasing. If the price goes up to $3, you'll still get your scoop for $2. But the price drops to $1, you still have to pay $2 because that's the deal you made. That's how futures trading works. But instead of ice cream, people make deals buying things like oil, gold, or money itself, right? And so Likewise, the thing that it doesn't mention, right, is the ice cream shop owner. If the price goes down and you still have to buy it for $2, the ice cream shop owner benefits, right? And so that's how futures trading works at a third grade level, super easy to understand. And again, why do traders use futures, right? We kind of referenced it a little bit up here, right? In terms of it's able to be leveraged. You talk about hedging and speculation. And, broadly speaking, people use it to make money, right? And again, I've have, clients of mine who use Archaide and our services in the past when they operated as an agency who have futures trading bots that make, 30% a day, what have you, right? So futures are a very powerful tool. That again, if you have an automated strategy around it that you could build inside of Archaide, um, then it's even amplified even more so, right? And so yeah, again, that is what my AI trading coach said about what is future trading and how it actually works. Um, Beyond that, right? Again, if you're new to the series, we are tackling the Your First Bot Challenge. So we're going to use the technology that you saw here inside of Archaide to literally go from learning, the very basics, which is what we're tackling right now. What is futures trading, right? We're over here in strategy hacking, right? We're going to learn about trading strategies, all this stuff. And then we're going to go from that simple beginning stage where everyone is able to kind of start all the way to launching your first automated trading bot, right? You're going to be able to do everything inside of one platform. You won't have to change platforms, right? Again, you'll learn the basics, you'll learn a strategy, you'll be able to back test, run some due diligence, and then also, launch, right, and paper trading in one platform. It's going to be really amazing. And again, today we tackled what is futures trading. Okay, so hopefully that answered the question. If you have any more questions or you want to see what the AI will, respond to the question, right, that you have, feel free to share in the comments below, and I'd be happy to go ahead and answer. Okay, so anyways, see you soon. Have a good rest of your day.